All right, everybody. This is the first time I'm trying this. I'm going to use some different software because YouTube seems pretty basic next time, hopefully. But can you guys hear me? Just give me a thumbs up or something in the chat. We'll see how it goes. No, love it. All right. All right, so I'm just going to kind of jump through the charts. I have no idea how many people are joining us today, but and if I can even keep up with any questions, but I'm going to just show you guys the view of what I see going on in the markets, kind of recap a bit of what's going on today. It is still a bloodbath in the equities markets. And I think my video, there's a square box in the bottom corner. I'm just going to, I don't have my video on this particular computer right now, so we'll just run off the daily chart above. But looking at the markets, still a bloodbath. If we go to the SP 500 down 4.5%, we are seeing the markets recover just a little bit into the closing bell. Typically, after a huge sell-off like this, we can see a short squeeze into the closing bell, which is one of my favorite trades. Usually on one of these biggest down days, the last 15 minutes of the day or so, we tend to see the market, let's move this up a bit here. We can sometimes see the trend change, and a lot of people are short and they're not going to want to hold over the weekend. This is kind of one of my signature trades if it was to start to break out and start to move up here. Now, I'm not trading. I'm on a laptop in a temp office today, and but we'll see how this unfolds. And if the market closes down around where it is, so if it just trades sideways or closes near the lows of the day, then I think we could see a very big gap lower on Monday because everybody's going to be fearful. They're going to stew over this over the weekend. And of course, when they can't do anything and all they read is negative data and news and headlines, they're all going to want to dump on the open and create an exhaustion gap to the downside. So that is kind of what we're going to look for Monday. But right now, let's look at the SP 500 and let's draw out some interesting price action, which I did share in this morning's video, which is if we take a look at the weekly chart, and we use this Fibonacci extension. This is how powerful this tool is. And I did a video on our YouTube channel not too long ago about how to use Fib extensions to identify where the next two targets are on the price action. If you go into our YouTube channel and go to just scroll back a few weeks or so, it'll show you how to draw these Fib extensions. Now I use eSignal here. I do also share how to set it up and the settings you need to activate in TradingView, because I know a lot of you use TradingView. So anyway, Fib extension tells us based on a previous run and pullback where the next two upside targets should be, which is the 618 level, which is the golden ratio, and then is the 100% measured move, which we've hit, and now the market has pulled back. So this is one of the big moves. This is telling us that this whole COVID-driven and AI-driven move has really been dead on in terms of its early momentum and where it's going. And now it has changed gears. So let's jump to the daily chart. And this is the more powerful stuff. This is really exciting to see how things are going to unfold next week, really. So based on this recent pullback using Fibonacci extensions, this little bear flag that formed, you can see here on the SP 500, we came to the 618, it gapped down today, blew through the measured move here of the 100%, and now it's trying to find stability. Now we got massive volume, so people are complete panic of what's going on. And if we go and take a look at the VIX, we've got the VIX up 41% or 38%, up massive, telling us that people are lots of panic selling going on. And another thing that we use here is this panic selling indicator. This is a panic selling indicator using the New York Stock Exchange volume. This one over here is FOMO. And more or less, we had this go all the way up. At one point, it was about 47. And if it is over 3, only 3, that is panic selling. So 47 is very significant. Couple that with this giant spike in the VIX. This is telling us people are dumping shares. And to give you a little view of how this 30-minute chart kind of works a little bit, based on this 30-minute regular trading hours charts, we can figure out when we're going to have these exhaustion moves to the downside. Whenever we have FOMO, which is this little indicator that comes up over this 3 level, these indicate short-term market tops, where the market's going to pull back momentum just for a day or 3 typically. And so we can couple that. This is FOMO indicator. This is a panic selling indicator. Now, these are Both these are just New York Stock Exchange volume ratios. This one down here is based on momentum and standard deviation. And if you guys haven't been to our website and you want to know how to draw this 30-minute chart, just so you can put these indicators on whatever charting platform you are, TradingViews allows them, you can go to our website or go to Amazon, go to our books, and I show you exactly the settings to set up in this book here. Technical Trading Mastery, 7 Steps to Win with Logic, on how to set up that FOMO indicator, panic selling indicator, overbought, oversold. That 30-minute chart is an amazing tool for short-term traders. Obviously, if you guys are here live, probably a lot of you are active short-term traders. And anyways, there's a lot of opportunity there. But let's just see where money is flowing today. We have some very interesting setups in terms of dividend stocks are getting hit really hard. And I've been mentioning this in the videos recently that dividend stocks, when the masses sell, and the majority of the money in the stock market are people 45 plus or retired and have the majority of the money. That's why the majority of the equities market are in older people's hands. They all panic at the same time, and you can see huge damage gets done to the downside. And there is no defense. Dividend stocks are not safe when the market crashes. As we can see, gold down fairly sharply. It's a slow-moving asset, but it's taken a hit. If we look at silver, it's down like over 20% in the last few trading sessions, crashing as well. When there is this type of panic in the stock market, it is very dangerous to try to pick a bottom. As I've been talking about, bottom pickers usually suffer pretty bad. You might get a bounce back and get back to break even. For example, I know a lot of people were bottom picking on silver. Now, if we get a big bounce up, it'll be break even before it potentially goes off another cliff. And that's the problem with trying to go about that. But let's go back to the dividend space real quick, because this is where most of you are probably feeling the pain. You're going to be looking at your investment accounts, probably have large dividend paying stocks and the big blue chips. Well, they're going to get hit very, very hard. And we can get an idea of where this momentum for the average so-called conservative portfolio is. You can see the dividend equity market has pretty much come down to its measured move. So again, major indexes hit its measured move. Dividend stocks have hit their measured move. But dividend stocks, I think, are going to be in for a real rude awakening because they're heavily tied to the energy space. And if we look at crude oil is breaking down clearly through this $65 per barrel level, which if we go back on the chart, you can see this level. And we talked about if it breaks this level, we're probably going to see potentially 55, potentially all the way down to $45 per barrel. And now we've got a very strong close at this point below this level. And so now energy stocks are going to be starting to sell off, because we have seen oil moving down for the last couple of years. When we look at the energy stock space, which they're down actually the most today is the energy sector, we've seen energy stocks going the opposite direction. They have been going up. And we talked about how this is a big inverse trade setup coming to play. We're waiting for this breakdown. And eventually we're going to see some type of bounce and some reaction high. And as it starts to roll over, that is when an inverse trade can be played. And we're going to see a precipitous fall on this market. And the reason why I like this trade so much is because it's screaming overvalued. It is screaming divergence. And it has multiple pivot lows. So I'm just going to zoom in a bit here. These pivot lows, every time you break one of these little lines, one of these lows, there's going to be a set of stops in place. I think there's even one right here. There's going to be stops in place. And as you break one, it's going to create a surge of sell orders. And the closer they're layered together, it triggers more and more orders. And of course, the bottom falls out. This is a very significant low. Along with these other ones, more or less 2 significant levels, potentially 3, were broken today, creating a massive frenzy. But now we've got all of these other little lows. We got a low, another low. Each one of these is going to trigger a big wave of panic selling. And so what's going to happen is we're probably going to see XLE go from, which was $93 a share not too long ago, potentially right back down to about $60 a share. And so there's a big downside play. There's an inverse ETF, ERY. I like that as a trading opportunity. I am not looking to get involved yet. We need a bounce and or a bear flag. And then as it starts to roll over, that will be the play. And we catch that next precipitous fall to the downside. Let's take a look at the financial space. I haven't even looked at this one in a while, but it has definitely put in a head and shoulders formation, a topping phase. When we look at it, pretty clear from a technical standpoint, we've got this shoulder, we got a head, we got a shoulder, we have this neckline here, which it has broken. Again, we got tons of volume in this market. Everything is screaming. We're going to probably have a washout low in the next session or two. Doesn't mean you pick a bottom, because this market could do another red bar, and just keep on falling. So let the bear market bounce, or the dead cat bounce, happen. Let the market come up and kiss this breakdown level goodbye. And when it starts to reverse down, that's when you take advantage of the down leg. Picking a bottom right now is just like picking the bottom right here. It might not be the bottom. A lot of damage is going to be done. So be very aware. I don't care what sector you're in love with and how oversold it looks. Everything is in a downtrend. The odds are it's going lower. You don't play the bounce or the bottom picking. You sell short the after the bounce has happened. All right, let's just take a look over at bonds. So there's only a couple places where money is actually flowing today. Bonds have had a very volatile day. They're still up on the session, but they have had a huge push and gap. Really, it's kind of the safety play. Everybody just piled into it, but rates really aren't changing all that much to give this type of move. We're starting to see it fizzle down. I think it was just a lot of people piling into this one asset class, and it kind of overvalued it for a little bit there. If we take a look over at the dollar, we see bonds moving up. We see the dollar starting to move higher. It's up about 0.8%. Again, big flush out with tariffs. This is a news-driven move. So typically, whatever happens on a news-driven move is usually given back. And we're about to see that potentially in a session or two. The whole tariff drop here could be completely negated and brought back. I mean, a lot of this selling was all because of tariff talk anyway, but the drop that we saw this week on the news being released is probably going to be given back. So money's flowing into the dollar, flowing into bonds, and we're also seeing it move into Bitcoin. And I was just on Kitco about an hour ago. We were talking about Bitcoin kind of off camera. They're wondering, well, how is Bitcoin going to move over the weekend? Because it doesn't shut down like the stock market. Anyone can still trade it. They're wondering if there's going to be big volatility in Bitcoin. My take is Bitcoin really only just started to get a little bit of a move up really in the last hour or so, or 2 hours. It's not really moving much. It's up a little bit, but I don't think there's going to be a lot of movement in Bitcoin over the weekend myself. I think everyone is in shock from being hit over the head with all the other stocks that Bitcoin hasn't moved. And everybody's just kind of like, you know what, don't break what's not fixed. I'm not going to trade Bitcoin. I'm not going to make any changes. And so Bitcoin seems to be just kind of floating there as like, hey, it's outside of the financial system to some regard. And people are kind of buying it as a defensive play. And so I do think Bitcoin's just going to drift sideways, and we'll see how it goes. If the stock market bounces next week, we'll probably see Bitcoin push back up, test these highs, maybe go a little bit higher. But if the selling continues, right now, Bitcoin is in a bearish chart pattern. It had a very clear breakdown. It had a double top formation. We traded Bitcoin right back here. We got here. We hit a 14% gain like 3 or 4 days later. We got it right up here at 108,700. And then it put in this double top, and now it's broken down. It's got this bear flag. It has this larger bear flag, which points to 7,200. So it is bearish. It is still looking like it wants to go down. Be very aware. If you probably go to the crypto space, everybody will say buy Bitcoin, buy Bitcoin. It's the only way everybody goes. But the chart is pointing to the downside. And for this particular time frame, you want to not probably be long. You want to be either in cash or focus on playing the trend that that's already in play, which is down. Let's take a look at the. Let's just see. Does anybody have anything specific they want me to go over? And I'll see if we can pull it up. Buy toilet paper. Consumer staples actually were doing pretty good. Let's see here. Not anymore. They got hit pretty good today. So, the other one is consumer staples got hit really good, and so did the utility space. Utilities were holding up very nicely while the stock market was collapsing. But today, we've got I think a lot of retirees and a lot of big money portfolios, people are panicking and they're dumping them. And so all of these companies that, typically a financial advisor shoves you in saying, here's nice dividend paying stocks, which are typically utilities, big energies, some big blue chips. All of those people are starting to bail out and sell. And I also think because tariffs are potentially going to increase inflation in the States, maybe rates aren't going to drop. And utilities are very sensitive to interest rates. They carry massive debt. And now we're talking, my bias is the interest rates aren't going to drop much at all. They might drop a little, but if interest rates are going to stay high now, this is going to kill a lot of profits on utilities. And I think the economy is going to slow. And I think we're going to see sales and everything else come to a grinding halt with tariffs coming into play. 10-year note. Let's take a look at the 10-year. I see somebody's asking about the 10-year. So the 10-year is breaking down. It is the pretty much inverse flip of the TLT Treasury bond. So if we look at TLT, it's got a shoulder, a head. It's got this broken arm kind of limb, this bear flag shoulder. And of course, it's moved to the downside. We can Fibonacci extension this most recent move and get an idea of where it should find support. So it's pretty darn close. It definitely was down. It might continue to work itself down, but it has broken down, I would say. It's moving lower, finding support, and that's why bonds are breaking forward. So if I was to just flip to TLT, it's the inverse of the 10-year note pretty much. We've got the bull flag and the pause, and now it's breaking out and kind of reversing here. So I do like bonds later this year, but I still think they could trade sideways for a very long time. If we go way back to COVID, it put in a massive topping phase, went into a stage 4 decline. It's carving out a bottom. It is now in a stage 1 base, which if you guys don't know what the bases are, or the stages are, sorry, there's 4 stages. I learned this from Stan Weinstein. It's been one of the most powerful tools ever in understanding this happens. These stages happen on all time frames. It doesn't matter in every asset. More or less, a stage 1 is a base. It's a sideways movement. Stage 2 is a bull market, which everybody loves. Stage 3 is what we have been in for the last couple of years, really, in terms of the majority of stocks. A large tech, AI have dragged the index up to mask this, but most stocks are actually in this topping phase and are actually already in stage 4 declines. And I believe we're about to go into a stage 4 decline and a massive financial reset. So where I think bonds are here. They're in a stage 1, which you can't see that on the chart. Bonds are in this stage 1 sideways phase, trying to build a base. And after that, we're going to see bonds have this big run. And I think some pretty big potential later this year. I'm not looking to buy bonds at this point because it's still dead money. It's in a stage 1. That's why it's shaded red. It's difficult to trade. It's choppy. It's trendless. But once it breaks out and starts to show a strong uptrend, TLT is going to be a really good trade. And I think there's some pretty decent return on there. Copper. Somebody wants to see copper. Copper is usually seen as a kind of a barometer for the overall market. It has these huge parabolic spikes. Typically, when we see any of these big spikes that go straight up, usually they get wiped right back out. The fact that it's hit these massive previous highs from the past just goes to show how volatile this is. And of course, I think tariffs and all these new rules coming out have made a lot of things move in ways move higher because people start buying a bunch of stuff before the tariffs kicked in. And now people are repricing commodities. Do they go higher? Do they go lower? Do they go higher because it costs more to bring them in? Does it go lower because now there's not going to be as much sold and there's tariffs? All this stuff is like walking through a landmine with what's going on, in the US and all the tariffs and stuff. Let's take a look over at silver. I see somebody wants to take silver. So silver is something I have talked about quite a bit. If you are a precious metals bug and you wanted to be in something, I've been saying this for months, like just play gold. And I know gold isn't what most people want because it's super slow and boring, but it's the most accurate. It's has the highest probability of generating gains, where silver has this high volatility, has these big 3 surges to a high, which is very bearish. It also pretty much hit its measured moves with Fibonacci extensions. When we look at these moves in the market of silver, if we come across here, silver has gone all the way up to hit its measured moves. It's 618 and had this three surges to a high, and now it's rejected. Just like the SP 500, as I showed you the first one here, it came up, hit that 100% and got rejected. These major moves from the bottom of 2020 are all playing out and showing massive signs that things are changing. I think oil breaking down is a sign the economy's now slowing. We're going to go into a recession. Tariffs, I think, probably is going to be the straw that kind of breaks the camel's back. And we're seeing all this stuff kind of unwind. Let's take a look. Let's take a look over at silver miners. I know a lot of you wanted silver miners before. You've mentioned it. Silver miners, they've been a real kind of dog. They just refuse to get traction and trade higher. So silver miners are have been the bottom of my list, the kind of the worst. And then you go to like silver and then gold miners and then gold. So if we take a look at gold miners, they're holding up a lot better. They came up and tested some recent highs and very close back to the 2020 highs as well. But again, they're getting hit simply because they're a stock stuck in the stock market, and we have panic selling, and we're more or less entering bear market territory. The long-term chart force has rolled over, and now we're kind of starting to break down. So let's just go back to the SP 500 real quick. Let's go to the weekly chart. This is kind of Friday weekly wrap up. The weekly charts are extremely powerful, and they give us a good bias of where we're at. This weekly chart right here of SPY, we closed near the lows, massive volume. This is not good. So what I think is likely going to happen is going to be something like this right here, which means price, everybody is freaked out. They sold everything right into the closing bell, massive volume. Everything is in favor of that. It kind of ran this pivot low right here as well. So a lot of stops got run at this low, and everybody's bailing out. So what's going to happen is over the weekend, the same thing over here, everybody stews over it, and the market opens up much lower, and most people bail out at the open. That's why it opens lower, is all these standing orders to get out, get out, get out. I think we're going to see something similar. Big gap down on Monday. It might flush down early in the morning a little bit more, and then we could see a huge, strong reversal bar, and this market works its way up for a dead cat bounce, or whatever you want to call it, a bear market rally. And then the big question is, does it build a bull flag and want to go higher, or does it start to roll over and break down and sell off in a much bigger way? So this weekly chart is very powerful, very bearish for a weak Monday open. Anybody who's long could make for a week, very lower price on Monday. That's typically what happens with this type of setup. Let's take a look. Let's just take a look. Let's see what it says. Dr. Copper, NVIDIA. Let's go to NVIDIA. Yeah, so the Magnificent Seven. This is something I've been talking about in the videos for a while. They have more or less topped out. Again, this is the weekly chart, and we have seen for several months the Magnificent Seven stall out. They had what could have been a beautiful bull flag pointing to a next huge rally in the stock market. Instead, it broke down, and now it's had that move to the downside, and it's closed down near the lows. This is not a good sign. If the Mag 7s are going down, so is the stock market. These drag the market up over the last year and a half. They are going to drag it down. The masses have piled into these, especially NVIDIA. And when the masses get in, it's usually emotional money, and they all pile in. It's all FOMO. They're riding the news, the media, and once they all start selling, it goes into a feeding frenzy like this, in terms of everybody just starts to bail and sell on it, and it'll just create a huge flush. So there is more downside here for the Magnificent Seven in general. If we take a look at the daily chart and just look at this more recent drop from this level down to this low and this pause, you can see there's still quite a bit of downside. The markets could flush down next week, which is why you don't want to pick a bottom. If these guys are dropping another, let's just see what this is percentage wise, another 4 or 5% potentially on Monday, that is going to drag the stock market down, and you definitely don't want to be holding it. So let's take a look at NVIDIA. I was talking to somebody about NVIDIA a long time ago. They wanted to know where to buy into it. I said $99 is going to be one first critical pivot. And then the next one, I think, was $64 or $65. And this is where things could unwind in a very big way. in terms of individual stocks move a lot more. They can really flush down. There's potential for a very precipitous fall in NVIDIA still. Maybe there's a bounce here first before it picks up speed. But I do believe we are going to see this pivot low broken. I believe we're going to see this pivot low broken, and maybe even this pivot low over here. And that will be a full-on kind of rounding formation. The question is, how long do these bounces take for it to work itself down there? So I'm pretty bearish on this space longer term. Looking forward a month or two, I believe we'll be at the same price or lower. But short term, I do believe stock market is primed and ready for a bit of a bounce. Let's take a look at Tesla. I know Tesla's down 10% today. A lot of people, I'm interested to get into Tesla down the road. I'm actually really excited about the whole humanoid and robotic side of things. I think there's going to be some amazing plays when I think maybe we go through a financial reset, we have a bit of a recession, and then I think we're going to come out of the ashes with the crazy robots everywhere and in people's homes. It's a huge market. That total addressable market for a robot for everyone's house and in factories is going to be insane. So I think that's something to keep our eyes on. And Tesla is going to play a huge role in this. Tesla is not just a car company. It has got so much different tech. It is all over the place. And when we look at it, the crazy part is it has fallen, 50%. I still think it could fall, another 50% and come down and flush these lows. The markets have a great way of really cleansing themselves. And as much as it looks like it's a huge discount, and doesn't matter how much you like it, we are more or less in bear market territory. The trends are down, and these individual stocks, when they're hated and they're being sold off, it doesn't matter what valuation they are or how good of a company they are, they still fall. And this is how I got into technical analysis in 2000 and during the tech bubble burst in 2001. And so I blew up some accounts, and I was trading the strongest and buying the strongest companies, and they weren't even tech companies, and they had quarterly growth, and they literally all fell 50 to like 90% during the collapse. And that was when I realized it doesn't matter how good the company is, especially doesn't matter if you like them or not. If they're sellers and nobody really wants to buy it because everybody's scared of the markets, it's going down. And so I believe if we have a big financial reset, we're going to have some pretty amazing opportunities to get into some of these great companies and buy NVIDIA probably at 50% discount from where it is now, potentially. Same with Tesla. And come out the other side, having some very awesome positions and fair value for a lot of these. Let's see what else. Anybody want to cover anything else here real quick? I think the whole point, this is total just, random kind of live stream. This is kind of the first one, and I see that I got problems with the square video and stuff going on, but I really just wanted to touch on the panic selling today. The levels that are happening are simply huge. I think the tide has changed. We've gone from a bullish market to a bearish market. We have actually a very important signal with our investment signal, our strategy that is going to be issued over the weekend at the Technical Traders. So there's a lot going on, and the big wave of selling today across the board in pretty much every asset class is a sign that there's been a major shift from bullish to bearish. And doesn't mean the market's going to keep falling right now very far. I do think it's primed and ready for a bounce, but overall, just need to be aware that if you're a long-term buy and hold investor, it is going to be a real struggle to hold on to these markets, because they're going to want to keep on falling. And as you can see here, this market is not as liquid as people think it is. If a bunch of people want to keep selling, there's not going to be a whole lot of buyers out there, not at a higher price. There might be buyers at a much lower price, but this market's going to be precipitous. So anyway, that was just kind of our first live stream. I'd like to try and have a bit of a process. I thought it's a very volatile session. Lots going on. The fact that the SP 500 hit a major measured top has been rejected over the last 2 months. We've now hit a short-term low for the SP 500. I do believe, I saw Microsoft at one point today had a really nice bounce. It had a really nice bounce and was starting to show some strength. It got sold into the closing bell, and so did Google. But I did notice on the Magnificent Seven, there were a few bouts of some strong selling. So we're getting closer. There's definitely some people gobbling up shares of the Magnificent Seven, but the masses are still unloading it. And if the Mag 7 are being sold, you don't want to be long these markets. because they're going to drag the markets down. VU, everything is the same. VU is SPY. It's all the same. So whatever we see in the SP 500 is the same position. Anyways, guys, appreciate it. Hopefully you guys all have a good weekend. This was pretty cool, but I can't wait to actually have a little more structure, and maybe we make like a Friday end of week wrap up and we can go through a series of stuff, kind of like I do in my morning videos, but more so from a longer term standpoint, and also what to expect on a Monday open, and go from there. Anyways, appreciate it, guys. Thank you for everything. Make sure hopefully you're subscribed to our channel. Give us a thumbs up, all that cheesy stuff. It does mean a lot, and give us some ideas of stuff to talk about. We are about to start working on a ton of technical analysis videos on how to identify trends, how to identify impulse moves, like when a trend has changed direction, Fibonacci retracements. We already did Fibonacci extensions. So if you want to know where your next target is, where to take partial profits, where to get out, go to our YouTube channel and you'll find it there. But we're going to have all kinds of great stuff coming on technical analysis, on how to navigate these markets, and even the short-term stuff using this 30-minute chart. If you are a subscriber to our premium newsletter, we use this stuff all the time, and a lot of you make a ton of money with the overbought, oversold conditions, the morning gap trades. I mean, it's amazing opportunity, and all this is again in my book, Technical Trading Mastery. And also, if you want a strategy that is more designed for a large portfolio that can benefit from all market conditions and everything's done for you, this is asset revesting. This is what we offer at our newsletter, this ACS strategy, which you can see the performance here. We're the top line, and really we just kind of etch out key, we move from one asset to another. And our biggest drawdown is less than 6% versus the stock market and the buy and hold. And we just take one base hit after another. We rotate from one asset to another. It's all about preserving capital, not having to give it back when a bear market comes. In fact, during bear markets, we excel. In 2022, we made about 5% return on the year, where most people lost 25%. So it's a 30% spread. So we have all this opportunity to have huge returns with a very conservative and consistent strategy going forward. All right, thanks, guys. Appreciate it, and take care once I figure out how to end this stream.